Until at a time. It is 7:30 Friday, July 23rd. I actually had no idea what day it was, but it's July 23rd. And this is your daily financial news. Before we get started, we have two people to celebrate. They got their next deal. I want to congratulate Sean and Sierra, as well as Frank and Jessica. Your cards will go out today. Again, folks, what I'm doing here is I have a contest to see if I can't have a positive impact of helping people get 500 rental properties sometime in the 12-month period between June 1st, 2020 and May 31st, 2022. We're almost at 100. So if I've helped you in any way, read my book, watched this channel, bought the course, got the free course, whatever it is, let me know. I want to mail you one of these. I bought 1,500 of these, and this is just one box full. So I got a lot to give out because I have every confidence that you are doing the work. You are taking advantage of the real estate slowdown, and you're doing good and great deals. One more time, Frank, Jessica, Sean, Sierra, congratulations. And I look forward to sending each of you a card as you close a transaction. Another quick announcement. I normally speak with Velocity Mortgage at 8 a.m. Unfortunately, Steven is feeling a little under the weather today. So I have decided I'm going to do an impromptu live Q&A at 8 a.m. Pacific today. Yes, that's about 28 minutes from now. I will just start a live Q&A. I have a bunch of topics that are kind of top of mind. If you want to join me, great. Ask some questions, wonderful. Otherwise, I'll go for about 20 or 30 minutes and just run through some topics. So impromptu, never done this before. We'll see what happens. 28 minutes or so, right back here. I'll actually probably do it from my computer so I have some more real estate instead of my phone. But when we are looking at the daily financial news, it is Friday the 23rd. We got to start with median home prices. Don't know if you all saw this. It came out yesterday. At least that's when I saw it. Median home price came in at a whopping 363 grand. That is actually up 23% year on year. And one of the things that I will cover in the live session I will do in a few minutes is, can the median home price fall 10%? And the answer is absolutely. And we will talk about it. I actually think the median price could fall 10% pretty easily. But you got to be careful. Remember, I'm not calling crash. I'm calling slowdown. It's actually a mathematical oddity with the word median. We will talk about that in the live stream here in a few minutes. The other thing that is very interesting about home appreciation is it's been up 112 months in a row. Folks, that's knocking on the door of 10 years. The other thing I know, having been watching the market for that long, is obviously interest rates are a huge part of that. If you watch this channel, you understand my story. I believe it is payment, not price. And payments are actually lower today than 2006, which is just really crazy. The other thing that we are seeing is inventory build as demand wanes. Yes, people are taking July off to go on vacation. They are burned out they're getting outbid. So inventory actually rose 3.3% month on month. Now just shy of 1.3 million homes available. Not sure we're going to get the 2 million I was calling for in July, but we have certainly started that trend, which is good for all of us. More balanced market, and investors will be able to find motivated sellers. I'm so excited about that. Let's talk about earnings, because that was a big week. Remember, on Sunday, I talked about the week. We are going to look for what are they talking about the second half, any companies nervous, and what companies are talking about inflation. So we got a lot of earnings out that we will talk about. American Express shockingly beat top and bottom. Top, of course, folks, is revenue. Bottom is earnings. But what I look for in American Express is two things. First, like the big banks, they reversed their reserves for bad debt. I told you these people were over-reserving 15, 16 months ago. Lo and behold, they're all reversing it now, and shockingly, their earnings look good. I told you this was coming. The other thing that's interesting about American Express is they gave a shout out or a call out to travel and entertainment. Travel and entertainment are up, which is really a sign that I think we need to pay attention to. right? This is one of those things we have to pay attention to, because what people, I believe, are doing now is they are buying experiences. The last 15 or 18 months, we were buying stuff. Think Sleep Number and Harley Davidson, which I will talk about in a minute. But now we are buying experiences. We want to smile. We want to create memories. And I think that is an investable trend. And also the reverse. We will buy less stuff. Honeywell beat top and bottom, raised guidance. Kimberly-Clark, this is one to pay attention to, kind of like Coca-Cola. Kimberly-Clark, if you don't know who they are a big consumer products company. They were in line with revenue, so they met expectations, but they missed and missed bad on earnings. Why? Input costs. Folks, they are seeing inflation in their products. They chose to eat it with reducing gross margin, and thus they are likely going to have to raise prices. Consumer products, that grocery store, I don't know where the government's looking, but the grocery store is going to get more expensive. That's pretty clear. Twitter beat top and bottom and raised. Actually gave a shout out to ad sales. We're up 87%. I suspect this is a sign that the small and medium businesses are coming back. What little I know about Twitter's ad revenue, it's very targeted. And thus, I think you're seeing the return of the small and medium business, which for me is awesome. I'm tired of the big boys winning. I want to see the entrepreneurs win. Intel. Intel. So they beat top and bottom, but they gave disappointing guidance. Again, folks, as I said on Sunday, didn't care about Q2. It should have been a good quarter. I wanted to know about the future. And the big thing for me about Intel is they said this chip shortage that we are seeing in used cars and all these other places, I think Ford or maybe it was General Motors just shut down another line, could extend until mid 2023, not 22, 23. Wow. What the hell happened with chips? Crazy. Skechers, basically athletic shoes, if you will, beat top and bottom. And they actually gave a shout out to the return to the office crowd. The return to the office crowd is looking for comfort technology. They make shoes. I guess they make comfortable shoes. I don't know. I don't think I own any. But yes, it's for the workers, I guess, that are on their feet all the time. So Skechers blew it out. And here's a big one. Woo! Boston Beer. They missed, and they missed bad. It's been a while since I've seen a company report such a horrible number that their stock's down 20% pre-market. Yes, folks, Boston Beer lost 1/5 of its value pre-market. I didn't bother to look it up, but damn, ouch. And what they're doing is they are blaming their new hard seltzer line. Very weak sales, so pretty crazy. So when I think about what we've just went through, I told you about this last Sunday, what we're going to be thinking about at the end of Friday, because it was all about earnings, the second half. Are they happy? Are they scared? Inflation. For me, consumer products, we got this from Coke and Kimberly-Clark and others. Inflation is real. Both commodities and input costs, shipping costs, all of these things are real. It's impacting consumer products heavily, and we could expect, as consumers, those prices to go up. Banks and credit cards who over-reserved, and I called it out over a year ago, are now reversing those because they are feeling that we are getting through this thing and we're on the other side. Airlines and, again, credit cards are highlighting that we are buying experiences, not stuff. I think luxury goods, the brands that saw the biggest benefit from the K-shaped recovery when we were buying stuff for our offices, our bedrooms, our workout gear, are slowing down. Think Sleep Number, Harley Davidson, both pointed at that. So generally speaking, if I were to summarize the second half, for most companies, they are generally optimistic about the second half. So that is good. And again, remember, I'm going to do a live stream here in about 20 minutes or so. What else do I have? I have a question for you. I actually got this question, folks. Remember, I interview Jonathan Twomley every Thursday. And if you are following Jonathan Twomley in his Facebook group, do me a favor today. He's wondering how many people watch my channel and visit his Facebook group. So if you're part of Jonathan Twomley's Facebook group, send him a note saying, hey, I follow you. I'm part of your, from one rental at a time. Let him know that his time with us is well spent. But he posted a question today, which I had to think about. What is scarier? You only have two options and you can't play games. You have these two options. What is scarier? Inflation so bad you don't want to hold cash. Kind of frightening. Or a crash so bad the only thing you can hold is cash. Think about that mental puzzle for a minute. Inflation so bad you don't want cash, or a crash so bad you only want cash. Don't try to split hairs. Just think about it. Let me know the answers below, or go to Jonathan's Facebook group and post there. I actually put my answer in this morning, so let them know you came from one rental at a time. Something we're going to talk about in the daily or my live stream, which I'll do, is if you want to start investing, what do you do? So that would be cool. Saw that ECB is out talking about having rates low longer. I think what we're seeing is the U.S., ECB, Europe, and Japan are all saying the same things. Looks like the U.S. is not the only one that's going to keep the printing presses on high. Looks like Europe could easily print another $1 trillion in stimulus. What I thought was really shocking and frankly potentially stupid is the bank presidents of ECB talked about, we will reduce our stimulus when we are confident inflation will stay above 2%. He didn't say 5, he didn't say 4, he said 2. If you're watching this from Europe, can you do me a favor? Is inflation above 2%? Because, granted, not in Europe, but it's more than 2% from what I read. So, whoa, what is heck? Yeah, what is heck? What the heck? Then the last question is, I found the 5 cities that are selling the fastest. 5 cities that are selling the fastest. Here they are. We will go 5 to 1. Anybody want to guess number 1? Number 5, Raleigh, North Carolina, selling in 18 days, median price $401. Richmond, Virginia, selling in 16 days, median price $396. Albuquerque, New Mexico. It's been a while since I've heard about Albuquerque. 14 days, $353. Boise City, 13 days, $481. And the winner is, with 12 days and a median list price of $281, Indianapolis. If I were going to guess these 5, I think I would have gotten 2 right. Yeah, I don't think I would have gotten most of those right. So in the end, folks, have a wonderful day. It is Friday. We're almost to the weekend. If you're interested in real estate investing, remember to do the work, 20 minutes a day, buy box, all that good stuff. And again, I'm going to do a live stream in about 16 minutes, and I will do my best to answer any questions that come through. It's hard for me to do that on these live streams or these daily financial news because I got notes and I get all confused. So sorry I missed some of your comments, but that's what 8 o'clock will be for. I will go through any questions you ask. And if nobody's there, I will just talk to myself. Take care. Bye.